Hello friends, this is your host Rakesh Kumar. In the previous video, we had seen the rising wedge and the examples of it. In this video, we are going to try a new pattern. The name of this pattern is the rounding bottom. Now this is a pattern where we will see a reversal from the price, and it forms after a downtrend, actually at the end of a downtrend. So let us see in the video how we will deal with the rounding bottom. And before we start the session, I would just like to remind you that in case you have not subscribed to our channel, you can subscribe to it now, and you can press the bell icon to get the notifications of the latest video uploads. And if you find this video useful for you, then please consider pressing the like button.
But before we begin, let us have a look at the risk disclaimer. It states that the futures, stocks and the options trading involve substantial amount of risk. Your capital is at risk. The losses can exceed the investment. The information is provided as is, and the user of the information assumes the entire risk of any use it may make or permit to be made. So let's get started.
Okay friends, as I mentioned that today's video is about the rounding bottom. The rounding bottom is a long-term reversal pattern, and that is best suited for the weekly charts. It is sometimes also referred to as a saucer bottom because the pattern looks like a saucer. I'll just draw a saucer for those who don't know what a saucer is. A saucer is something like this, the one in which you drink tea or something like that. Okay, so now the rounding bottom, as I told, that it is also known as a saucer bottom, and it also represents a long consolidation period that turns from a bearish bias to a bullish bias. Okay, the idea is that the price is first bearish. Okay, the price is bearish, and then it forms a low, and then it starts rising, or the bias becomes bullish. And this pattern here this one is known as saucer. If you close it like this, it will become a saucer in which you can drink tea or do whatever you want to do. I hope this is also clear. Now, what are the essential ingredients for a rounding bottom or a saucer bottom to form? The first thing in case of a rounding bottom is a trend, prior trend. So we'll mark a prevailing downtrend. It should be lower highs and lower lows. Very well. Okay, then after, the second thing that is there in the rounding bottom is a decline. Of course, we have already made a decline, because if there is a prevailing downtrend, that means there is a decline. So this is also referring to a decline also. From here till here, it is a decline. Okay, then after, what we need in a rounding bottom is a low. Now friends, whatever is the lowest portion in the decline, actually there are more lows than you think. These all these are lows. All these are the lows. But once a lower low is formed, that is not the low. Okay, the low that we are talking about here is this one. Okay, because there is no low which is lower than this. All right, then after this we need is an advance. Of course, after the low is made, the price starts advancing because it has cleared these reaction highs from this low. It clears the reaction highs from this low and starts advancing to the upside. That means the bearish bias now has converted into a bullish bias. All right, after that we need a breakout. and then we need a retest. Now this advance here will keep on going till the time it does not reach this level, from where it actually started forming a low. I'll try and explain this in the examples also, but you have to understand that this is how a rounding bottom is formed. Okay, and from this, oh sorry, I'll make this again. From this place to this place, this is called decline. From this place to this place, it is called advance, and this is the low that is forming here. Till now I hope I have made things clear. And after that we have a breakout. Okay, that breakout, and then this thing happens. Now this is an ideal condition. What should happen? First there should be a decline, then there should be a low, then there should be an advance, and after that there should be a breakout here. Then after breakout it will make a high, then after making a high it will come to retest that breakout area, and this is the area where we have to look for a buying opportunity. Once we buy here, we keep our stop loss somewhere here in this region. Okay, we keep our stop loss somewhere here, and we keep our take profit 3 times our stop loss, which is ideal, or whatever is the next level of resistance. In case this is 1.2062 is the next level of resistance, then we will keep our target here. Well, that's all in this pattern. Okay, but I want to tell you that you have to open the position after breakout. You don't have to open the position, you have to open the position after a retest. Here if you see something like a bullish pin bar forming at the support, or you see a bullish engulfing candle forming at this place, then only you have to open the position with the stop loss slightly below the candles which were giving you bullish indications. Of course this is a speculation, but this is a speculation with an information edge that the rounding bottom has been broken. I hope the psychology behind this pattern is clear to everyone. And now I want to tell you what are the precautions that you have to take while trading this pattern. The precautions in most of the cases that I tell you are same. First is that you have to wait for the confirmation before entering the trade. Now what is the confirmation? After the breakout, the price should stay up from here for at least 3 consecutive days. Okay, if it stays for 3 days above this, then only you have to be sure that the breakout has confirmed, and you don't enter the buy trade after 3 days. You wait for the price to turn back and to test this broken resistance as support. This may take days and months, so but you have to wait. The patience is the key here. Once the price shows some bullish strength here, then you have to buy this market. Now the second thing is that you have to get out at next resistance level. Suppose you bought here, you keep your stop loss here, and you get out at the next resistance, wherever it is, a good resistance. Of course not this reaction high, but at the next good resistance. I am sure that now you know how to draw the resistance and the support lines, which we have taught in the previous video. If you don't know, you can check out the previous video where I have mentioned how to use the resistance and the support lines. And the last thing that I want to tell you is that don't be greedy. You may think that the price will keep going up because the uptrend has just started, but you never know when the price will come back and even erase your profits in the trade. So you don't be greedy. You get out as soon as you get the 3 times of your stop loss, or as soon as you reach the next resistance level. Don't wait for the eternity for the price to give you a gazillion pips. Get out in time. That is my humble opinion. That's all for the saucer bottom or the rounding bottom pattern. I'll tell you more about this pattern in the next video, where I will show you some example from the real charts. Thank you very much for watching this video.